So this was the first real sign that the tariff war globally is starting to impact locally. Consumer sentiment dropped 6% in April to a level of 90. That's firmly pessimistic. 100's about neutral for the survey. But the responses over the survey week suggest the shock was a little bit larger than that. The survey was in the field over the weekend at April 6. Roughly half the survey was conducted after the US tariff announcement. Amongst the responses at that part of the survey, sentiment was down closer to 10%, down to around 86, 87 in level terms. So we are starting to see now it's not just a far-flung trade war between the US and its major trading partners. It's having a more direct effect on financial markets, and that seems to be an important channel. When we look at the various responses to the component questions, assessments of family finances did deteriorate in the month, particularly amongst older age groups where superannuation holdings are probably a more prominent factor in their considerations. I think though, it's more of an alert sign than an alarm sign. As I said, we're down to that sort of 85 to 90 range for sentiment. We're pessimistic, but we're still well above the extremely weak reads we had during the cost of living crisis, when prices were surging and the RBA was actively raising rates. We saw reads in the 75 to 85 range persist for a couple of years. So I think also in the responses, it was a broad-based weakening. That effect on family finances was pretty clear. Most of the other shifts, I'd say, were a vibe effect rather than a direct expectation. People are still slightly positive about their finances over the next 12 months, but they're much more concerned about the economy. They're less confident about jobs, but importantly, the shift in expectations around the labour market didn't signal a spike in job loss fears. So again, this, what we're seeing, the channels suggest that from the tariff war through a downgrading of expectations for the economy and the hit to family finances from weaker financial markets. But there's not this expectation that the economy is going to contract and that we'll see a round of layoffs and job losses. So again, it's a sign of alert, not alarm, for the likes of the RBA. If it's sustained, and I suspect it will be, the situation has deteriorated in the week after the survey. It's very fluid. It's hard to see a path back to where we were or to a de-escalation. At the moment, things are escalating. So we need to brace for more weak reads on consumer sentiment near term. And it will, at the margin, encourage consumers to hold off on spending and prioritise saving. But it doesn't look to be more threatening than that at this stage. So yes, it's a first sign that the US tariff war has come to Australian households, and we're seeing some reaction sentiment-wise. There's likely to be more negatives near term, but we haven't dropped to the depths of despair. And from the RBA's point of view, it's a signal that there's a shift happening, but it's nothing overly recessionary, for example.
The content of this recording is informational and of general nature only and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.